2047 जब आजादी के 100 साल होंगे ना, विकसित भारत बना के रहना है दोस्तों।
India's fastest growing large economy. Global headwinds, biggest challenge.
We've reduced the slabs. There shall be only 2 slabs, and we are addressing also the issues of compensation cess.
Government unleashes long delayed reforms.
टोटल 5 लाख युवाओं के जो जॉब्स हैं वो आपसे छीने गए। महाराष्ट्र के युवाओं, आप इस बात को समझिए।
How can Finance Minister ensure job creation? What to expect from Union Budget 2026? Pre-budget roundtable.
Hello and welcome to the pre-budget special roundtable. Never before have geopolitical issues cast such a fog of uncertainty over a budget-making exercise. In a climate of intense global headwinds and uncertainty, Finance Minister Nirmala Sitharaman's 9th consecutive budget this Sunday will be expected to sustain reforms and achieve macroeconomic stability and ensure that growth doesn't taper off. What then are the challenges before the Finance Minister and the Modi government, and what lies ahead in 2026 for the Indian economy? Joining us on the pre-budget roundtable is a stellar panel of economists and industry voices. I'm joined by Neelkanth Mishra, Chief Economist, Axis Bank; Soumyakant Ghosh, Chief Economic Advisor, State Bank of India; Pranjal Bhandari, Chief India Economist, ASEAN Economist, HSBC; Nilesh Shah, Managing Director at Kotak Mahindra Asset Management; Naina Lal Kidwai, former President FICCI; Sajid Chinoy, Chief MD and India Economist at JP Morgan. Good to have all of you. Some of you are part also of the Prime Minister's Economic Advisory Council. I'm going to go question by question as we do on the round table, and we'll get all of you to respond to those questions. Let's start with the first big question. What is the principal challenge facing Finance Minister Nirmala Sitharaman in this budget year? Neelkanth Mishra, why don't you kick that off? I'll get each of you to get 90 seconds to tell us, if you were Finance Minister, what would you see as your principal challenge 2 days out from the big budget?
So there is significant slack in the economy. So the very fact that the core inflation indicators are showing such low measures, and we have the economy significantly below the pre-pandemic path, suggests that there is space for the government to stimulate. But at the same time, I think it's important to make a choice between fiscal and monetary. The biggest challenge, I think, for the government right now is that it has chosen the path of fiscal conservatism, which I think is the right one. It is likely to stick to the debt to GDP path that it has guided to, 50% at the central level till FY31. But this is not reflecting in lower yields. So if the government borrows less, that should mean that the cost of borrowing in the economy should come down. There are clearly transmission issues. Some of them lie at the door of the RBI, but I think there are many challenges in front of the government as well. I think yeah, go ahead.
No, before I go to my next, just to, do you believe that maintaining the FY26 fiscal deficit at 4.4% amidst mounting infrastructure, welfare, defense expenditure post Operation Sindoor, do you believe that that will be met? Are you confident of that? Or is that a big challenge?
Look, there has been some tax slippage. I would say that there is potentially some slippage of 60,000-70,000 crores, which is give or take about 0.1, 0.2% of GDP, 0.2% of GDP. But that, given the significant cash balance which is accumulating, I don't think should be difficult to finance. But I think the challenge is not this year. The challenge is what happens next year. And more importantly, what happens in FY28 when the pay commission hit comes to the government, and how they manage to retain the path to 50% debt to GDP. But I think the immediate challenge is much bigger, which is that despite this fiscal consolidation, despite this remarkable fiscal discipline, the cost of money in India, the cost of capital is not falling as sharply as it should.
Okay, I'll get you to expand on that later. But Sajid Chinoy, what do you believe is the principal challenge facing Finance Minister Sitharaman?
Good evening, Rajdeep. I think the principal challenge is the global backdrop against which this budget is being held. I think these are truly extraordinary times. There's a certain global order that we've come to expect over the last 80 years, which is unraveling and unraveling rapidly. This has two implications. In the near term, this is leading to a lot of financial instability globally. You've seen gold prices at record highs. People don't know if there's a risk-free asset that you can consider risk-free in the world anymore. Concerns about dollar debasement. Now, in that environment, the typical reaction for emerging markets like India is to hunker down. When there's global instability, be conservative, reduce your fiscal deficit, create buffers. But what's unique about this global environment is it's also one where, the law of the jungle has begun to prevail, and economic heft really matters for global leverage. And that would argue to go in the other direction, to be adventurous, to push on the reform pedal. So I think the challenge that is unique this time is you've got one set of forces arguing for conservatism. There's another set of forces arguing for being adventurous. And I think the way to, bring this together is I think the fiscal deficit will be conservative on the math. I think deficits will go down to reassure investors that India's macro fundamentals remain very stable. But I think this year's budget is to be not the numbers, but what happens in the budget speech. And we use the budget speech to inject much needed reforms or a continuation of the reforms in the last 6 months, and you exhibit your adventurism over there. So I think that's the balance. How do you simultaneously be conservative on the fiscal math, but be adventurous on the reform front? So you're telling people that, we're going to push hard on the growth ladder, but we're not going to do it at the risk of macroeconomic instability. It's that balance, I think, that is going to be crucial in this budget.
We'll come to specific reforms also later on the roundtable. But Pranjal Bhandari, your view, what do you see as the principal challenge facing Finance Minister Nirmala Sitharaman?
Yes, thank you very much, Rajdeep. I think there are two challenges. One is uncertain growth and the other is a weakening currency. Now, on uncertain growth, last 12 months, the growth numbers have been very good, but we can't take this for granted because a lot of one-time good things happened. For example, after a long time, there were good rains. Suddenly, oil prices fell, which is good for the economy in terms of growth. Then we had inflation falling, so the central bank could cut rates. We had all of those tax cuts, GST and personal income tax. We had enough to get us good growth numbers. But the efficacy of all of this could start to decline as we get into 2026 or, FY27. And what will drive growth then in a global environment that remains uncertain? I think that's sort of like the number one challenge for the finance minister at this point of time. We can get into what I think is the right thing to do right now, but mostly I would agree with the previous speakers that it's a combination of restraint. Don't become too adventurous on the fiscal part or on the monetary policy part, and stick on with a lot of the reforms. I just want to make one point here, that this is not a T20 moment. It's like playing a test match. We don't have to hit a 6 in every ball. The scoreboard doesn't really have to look exciting at the end of every over, because I think that's how we really win this one. So we have to really get into these important reforms, which get us good, meaningful, medium-term growth. And, we can speak a little bit later about both external and domestic reforms. Quickly,
in fact, that's my next question. What are the key reforms going to be? I'll come to that. But I like the T20 analogy with test matches, because remember, we are not a very good test match team at the moment. We are a brilliant T20 team. So in a strange way, with the T20 World Cup coming up in a week's time, you're telling us the finance minister should not be looking to hit the ball out of the park on day one. You're asking this to be a budget for the next 2-3 years. Am I broadly correct? Or set the direction for the next 2-3 years?
Yes, exactly. Yes.
Okay. Soumya Kanti Ghosh, your first reactions. What do you believe is the principal challenge facing Finance Minister Sitharaman?
Yeah, thank you, Rajdeep, for having me on the show. I think the budget, the primary challenge the finance minister is facing is the extraordinary global situation. I think we are living in a fragmented world, and you don't know what is going to happen today or even tomorrow. Every day the policy is changing, and that is actually creating a lot of pressure on the external environment. So when you are so that is the first thing. The second thing is that in that context, it is also creating a lot of pressure on macro variables like the rupee, the interest rate, and other factors. The third thing is that in this era of significant policy uncertainty where you don't know what is going to happen tomorrow, you don't know whether the trade deal with the US is going to materialize, it is better that we stick to the basic principles of economics in the budget. We stick to the fiscal path because we have actually has been one of the few countries which have charted a very conservative fiscal deficit target after the pandemic, and which has paid dividends to us in terms of a low inflation. And the second thing we need to do is basically do some of the reforms, continue on the reforms path. We have done a lot of reforms in the last year in terms of the macro reforms. Right now, maybe it may be the time to do some of the micro reforms, which could actually give dividends. So in my sense, I think there is nothing to do any extraordinary, but just stick on the basics and on the path of consolidation. And I think that will pay you dividend.
Nainalal Kidwai, principal challenge from an industry perspective facing the finance minister. We've seen in the economic survey itself questions being raised as to why is private investment not doing more despite all the concessions and benefits that they've got. Is that a big challenge? How do you get private investment? Net FDI is another challenge. Are those issues that you believe the finance minister will have to address? Create a climate where people feel a bit more confident about investing in India.
Raj, you're absolutely right. In fact, for a FICCI confidence survey which was just conducted, the three things that industry CEOs put right on top were job creation as number one, capital expenditure, to your point, and the third was exports. So all three, to my mind, given the finance minister has always heard and understood what industry wants and requires, have got to be on her mind. So the job creation, I think, becomes critical in light of tariffs, which have impacted high job-intensive sectors like apparel, leather, diamonds, and therefore how we help those industries through these times, but also look at intensive job creation industries, so manufacturing to a lesser extent maybe, but the service sector, tourism, must figure in terms of the job creation element. On your point on capital expenditure, that is directly related to demand. And the GST cuts are reflective in terms of seeing that demand go up. Capacity utilizations have risen to about 75%. The sweet spot is typically around 80%. When the sweet spot, I mean that as capacity utilizations go north of 80%, industry begins to look at investing in more capital expenditure. So it's directly related to demand for goods, and that can come both from domestic demand, which the GST cuts have helped, but also from exports. And that leads me to the third point that industry CEOs had pointed out, which is exports. What we can and need to do to drive exports comes from making sure that we have cost-competitive industries. So that's every factor of production: cost of capital, cost of land, cost of electricity, cost of logistics on the one hand. And on the other, the schemes that we have dedicated ourselves to, the PLI schemes, I believe SEZs are very critical going forward. And given the success of the electronics industry, one of the asks from FICCI has been, let's look at a large-scale electronics park on the style of Shenzhen, on the style of what Vietnam has created, where the supply chain, including the OEMs, the manufacturers, all come in under one roof, and we provide the support of infrastructure and ease of doing business within these limits, and push for exports in areas like electronics, where we've already seen some success.
Nilesh Shah, as I said, I'm going to conclude with you, Nilesh, on this, on the first question, which is the principal challenge facing the finance minister. You track the markets very closely. What is the market expecting?
I don't know about market, but let me put my expectation. India historically is known as Sone ki Chidiya. But our present situation is more like Kasturi Mrug.
Like Kasturi Mrug. We get about 2% of GDP by way of foreign direct investment. On a net basis, that amount is almost negligible. About 150% of our GDP is lying in precious metal. Majority of that is locked in Tijori parallel economy. I really want Finance Minister to think out of box and bring the savings which is locked in the Tijori into the bazaar. That can raise tax revenue for the government, which will allow them to spend money on capital expenditure and infrastructure. It will also put money in the pockets of entrepreneurs. They will be able to spend or they'll be able to invest. At one shot, we will be able to unlock our frozen savings and benefit economy from a growth point of view. Finance Minister has trinity of impossible in front of her. Keep on spending money on capital expenditure because private investment is subdued. Yet maintain the path of fiscal prudence because you have promised to bring down debt to GDP ratio to 50% by FY31. And this can be achieved by raising non-tax revenue, asset monetization, divestment, or converting Kasturi Mrug to Sone Ki Chidiya.
I like the Sone Ke Chidiya analogy as well. But let's hit, you see, it's all very, I think everyone knows the concerns, the challenges in a way, but how do you initiate? The word reform has been used by several of you. So I'm going to ask you for specific reforms that you would have. Neelkanth, you go first. What is that specific reform? The Prime Minister speaks of a reform express in 2025. And yes, there have been attempts made. The Labour Code, for example, kicks in now in a month or so. Do you believe that enough is being done? And what would you now like to see to in a way give the animal spirits of the economy, of the investors, an opportunity to actually put their money where their mouth is in a way?
So the very fact that the pace of fiscal consolidation is now easing. So we did about 80 basis points of explicit consolidation in FY25. If you include the off-balance sheet changes on the GST compensation cess, FY25 fiscal year that ended in March 25 was 130 basis points of fiscal consolidation. This year we had 40 basis points of fiscal consolidation. In the next year, the fiscal consolidation will be lower. So in a way, the government is now done with the hard miles on fiscal consolidation, and therefore the economy should start doing better. So there is not, I think, any pressing need to do all the fiscal stimulus in the budget itself. But you're absolutely right. I think the working environment, operating environment, from what I see, a number of the recommendations from the Rajiv Gauba committee, which is giving recommendations on a frequent basis. So it's not a one-time committee. So there are several of them, including the rescinding of quality control orders, which seems very nerdy and too detailed. But I think the impact on some sectors, especially like apparel exports, can be substantial. So there are many such measures that are already underway. It would be great if some of those also are further announced in the budget speech. As we discussed earlier, there's not much room for fiscal giveaways and not much of flexibility on the budget side. And the government has attempted to make budgets much more predictable than they used to be, which is a good thing. And therefore, a number of the exciting features can come in the budget speech. And in that speech, in terms of reforms, I think greater clarity and certainty on the taxation side. This is something that, including some of the decisions that recently came from the Supreme Court, there are new types of concerns which are emerging among investors. I think certainty on the direct tax side, simplification of procedures and processes, decriminalization of many of the potential offenses. So we are aware that many such attempts are underway in the government. They are exploring many such changes. Easing those would be too much detail. It's not very good for headlines, but they can have a substantial impact on the growth momentum over the medium term.
You know, because Sajid Chinoy, a word that I heard in Davos last week was not ease of doing business, but the speed of doing business. And yet I hear from MSMEs that many of the regulatory compliances are still far too burdensome. So is the first instance, you believe reform, how do you make it a speed of doing business if you have so many regulatory compliances still in place?
Rajdeep, you're right. I think, the whole focus on deregulation from the economic survey, is to try and improve the ease of doing business. And it's in a world where there's so much Chinese excess capacity, which threatens our small, medium enterprises, you don't want to shackle these SMEs by giving them more compliances. But let me answer your original question. What specific reform does one advocate? Yes. It's very clear to me what the near-term objective should be. We all agree the near-term objective has to be to jumpstart private investment. So the question is, what is ailing private investment? And in my mind, it's basically demand visibility. Balance sheets are very strong, cash levels are high, profits are high. But in a world with so much excess capacity in China, businesses need to see more visible demand. A lot of that demand has to come from exports. I've said this before, only 13 economies in the last 100 years have grown at an average of 7% for 20 years. And those 13 economies had one thing in common, very strong export growth. And, I'm very encouraged that in the last 6 months, the government has not succumbed to export pessimism and is on this, a raft of free trade deals have been signed. But the question is, what do we need to do to succeed and to create a force multiplier for those free trade deals? And in my mind, the specific reform has to be to clean up the customs duty part. The oldest adage is that an import duty is like an export tax. So I think this is a wonderful opportunity on the back of all these FTAs for the budget to attempt a significant simplification and cleaning up of import duties, tariffs, and non-tariff barriers. If in a world of global value chains, it's only when you get that ease of imports will you be able to succeed on exports. I think that's a very tangible thing the government can do. It will reinforce the impression that we are serious about export-led growth, in this difficult and hostile global environment.
I'm going to put up a graphic in a moment also, of course, of the falling rupee, because there are concerns of that. And the economic survey also admitted that the rupee is punching below its weight. But Pranjal, what is that key reform that you would like to see to ensure that we have a test match mood and not T20?
I'm going to follow on that analogy. I think we've taken some very good steps on external reforms already. We were dragging our feet on many of these trade agreements, but we've signed several of them, one with EU, one with UK, New Zealand, and many more in the offing in the next year or so. So I think that's great. We've cancelled a lot of the quality control orders. We seem to be, having a softer approach to China. At least, we've resumed some of the flights and all of that. I think these are sort of great ways to integrate back with global growth. My sense is that I think this was the missing piece why private investment wasn't taking off. Exports were very weak. But then there is one thing we've still not done, and I'm hoping that this is something we take forward, which is look east. All of this while we are looking west, we are having trade agreements with the EU, with UK. But what about looking east? What about a relationship with ASEAN, where a lot of the manufacturing happens? Can we partner with ASEAN in this global value chain? Can we be more open to Chinese FDI? Perhaps not in very sensitive or strategic goods, but what about mid-tech goods like textiles, footwear, furniture? I think a lot of partnerships can happen here. Look at Vietnam, getting all of these Chinese FDI in mid-tech goods and growing 7.5% per year. I think these are great opportunities out there that we should really try to get. And the final one is the rupee. I'm very glad that it came up in a big way in the economic survey. I think the currency at this point depreciating is not a bad thing because it's an offset to this 50% tariff that we have from the US. It helps make our exports competitive. You will never have, any economy really increasing their exports over time with a very overvalued and a very strong currency. So I think these are good steps. We're making the right noises. The economic survey had a lot of gold in it. And my sense is, I think we're on the right track. We just keep working on all of these reforms.
Before just to push you on the point you made about China, do you believe, therefore, and anyone can please feel free to to dip in on that. Sajid, if you want to respond to what you heard from Pranjal, because you also spoke just now about earlier about the need to be perhaps a little bit more adventurous. Are you saying that we should be also looking at, do you agree with Pranjal that we should be looking east as well, not just at a EU deal, but looking at possible ways of strengthening trade ties with China, where we have a huge trade imbalance at the moment?
Is that for me?
Yes, go ahead, sir.
No, absolutely. I completely agree with Pranjal in the following sense. The most dynamic region of the world in the next 20, 30 years is going to be Asia. Most global growth is going to come from Asia. So we need to do two things. A, we need to integrate better with Asia and have more free trade agreements with them. And I've been advocating we should be joining next after the EU deal, among the largest free trade regions, frameworks in the world, which is the CPTPP, which has got 15% of global trade flows through that. So that would be the next goal. With China, the fact is we have to learn to live with China. China has got the kind of excess capacity that nobody else has. It has the manufacturing prowess and the technological capability that nobody else has. So India will be very reliant on Chinese intermediate goods for a long period of time. The choice we can make is, do we want to import that or do we want to attract more Chinese FDI? And I'm very much in the latter camp that, I understand geopolitical considerations, but we should be thinking of easing Press Note 3 and attracting more Chinese FDI. That does two things. There will be some technological transfer, and that value add, a lot of that value add will accrue to India. It'll create jobs in India rather than us importing from China. So we have to learn to create a better relationship between these two. One final thing I'll say, Rajdeep, a lot of hand-wringing about the rupee. The rupee is a symptom. What India needs to work on is on attracting capital flows and stable capital flows on foreign direct investment. And some of the things that have been said, including simplifying the tariff regime, import tariff regime, simplifying some of the restraints in China will help us attract more FDI.
Soumya Kanti Ghosh, what structural reforms are needed to sustain the FDI inflows in a volatile global environment? I look at RBI data, November 2025 saw net FDI outflow of $446 million. This comes on the back of $1.67 billion of outflow in October. So this is another major challenge. Do you see the budget providing any kind of direction in terms of structural reforms that are needed?
Yeah, thank you, Rajdeep. I think I will venture out a little differently in terms of addressing the reforms which needs to be done at this point of time. While I agree with the fact that custom-based rationalization is the need of the hour, because we have done on the direct taxes first, then you have addressed the indirect taxes. Now is the time to clean up the customs tax. But apart from that, on the rupee front, if you're asking me, from the last January 25 till January 2026 till today, there's been total outflow of around 17 billion US. So as long as this portfolio, is capital flow doesn't stabilize, I think I don't see the rupees settling soon at the current level. It will continue to be volatile, and it will also depend on how the pace of the other trade deals.
No, but should we be concerned about it? Some of the guests suggest we shouldn't be too concerned about it. Do you believe we should be concerned about a volatile rupee?
See, at the end of the day, I think there is both an yes and a no to it. Yes, there is some part, there should be a little amount of concern in the sense that if the rupee continues to depreciate, there could be a self-fulfilling prophecy of declining it further. On the other hand, the argument that rupee could act as a shock absorber is also correct. But in my sense, I think continued depreciation of the rupee also sometimes creates a self-fulfilling prophecy, which could take it down to lower levels, and which is exactly has been emphasized in the economic survey, where we're saying that the rupee is actually punching much below its weight. Because if you look at the trade deficit data of the last year and this year, it is hardly any different. So there is no macroeconomic reason to suggest that why the rupee should be depreciating. So keeping aside those facts, I think there are a couple of reforms which I would like to mention. I think the first thing is on the agricultural sector. I think for the last couple of years, we have done a lot on the SME sector. We have introduced a credit guarantee scheme, which has been largely successful. I think now is the time for the agricultural sector maybe to unveil an omnibus credit guarantee scheme which exists on the SME sector, and also to redefine the agricultural value chain in the Indian context, so that the sector gets fund and investment, which is unfortunately a little absent in India. The second important thing, which is also very important for a country like India for the ease of living, is the urban infrastructure. You have seen that how cities after cities in India last year has been ravaged by floods and urban infrastructure. So I think it's high time now that the local bodies, specifically the urban and the rural local bodies, and also the government takes up the reforms of the urban infrastructure in the right earnest. I think the government has made the move in the right direction in the past. It's now high time that is actually operationalizing it. The final point which I will mention is also a very important point, is that I think the government has introduced a very successful land scheme, cardholder scheme, which is called the Shamitya scheme for the rural households. I think the time has come possibly for the urban households to have a scheme like that. If we can introduce a scheme whereby you give property cards to the urban population, that actually would also help in urbanization, making it competitive for the industry to know which urban piece of land they can use for industrialization. Because as of today, it's a very politically sensitive issue in the Indian context, these land reforms or this taking up lands for industrial purposes. So I think some sort of reforms in this sector would help a long way in making the urban land market competitive and also help in the urban infrastructural process, which we badly need today.
Nainalal Kidwai, again from Davos, one senior global economist told me if there were three things he would do for the Indian economy, it would be find ways to increase rural productivity, look at urban governance, and look at skilling. Now, these are three areas which the budget can't tackle all of this. But if you were to pick one area where you believe the reform thrust now should be there, what should it be?
So I would just go back to an ask that comes every year, and that is the whole area of tax clarity. And it cuts across every industry. So you take the example of the GCCs, big service providers across the world, large employers, 1,600 of them now in India. Is there clarity in every one of their minds on how transfer pricing will work, how ESOPs will work? What is that national framework and structure that they can plan on as they go forward and possibly as we look to attract more? So I do think that the way our tax regimes are very complicated, muddy the works. And it's going to be very critical to have a principle by which we can actually set these frameworks in advance so that companies come in not trying to evade tax, but they get caught in the crosshairs of interpretation and then all the issues that follow. And related to that in reforms is the whole area of dispute settlement. I've seen a statistics which also says that the CITAs, there's 40% vacancies therein. So we need to resource the departments. We need to make sure that the dispute settlement happens quickly and indeed cut down the sheer degree of disputes for which those reforms are internal and actually, I think, quite easy because we're not dependent on the rest of the world or tariffs or any of the headwinds outside. So let's sort these out. In fact, in the same FICCI CEO survey, 80% of the respondents said customs reform. This is very much, again, in our space and something that we've just got to tackle. So looking at the way we handle our own house at times when we can't predict what's happening from outside in terms of tariffs may be important. And otherwise, I agree, as I had also said, exports are critical. Skilling is, of course, important. In fact, FICCI put forward a wonderful idea on a sort of youth skilling scheme where folks at the age of 21 to 30 can be deployed for public services. So they can come in for sanitation, for helping in rural surveys, in various ways, which brings them into the economy, gives them that earning, and anything that comes into the earning mechanism also creates demand, and therefore, I would hope capital expenditure from the private sector.
Where a lot of schemes have been announced in recent times, the internship scheme, for example, was announced, but when you look at the ground, those schemes actually haven't translated into the kind of action. Now, this is not just the center, but the states. A lot of focus is on the union budget. I think state budgets and state finances need to be looked at. But I'll give you, Nilesh, what is that big reform you'd like to see, and then go to Neelkanth.
So the one big reform I would like to see is to set up ease of doing business commission a regulatory authority where any entrepreneur who is burdened by compliance rules, regulation, can reach out and
coordinate across central, state, and local government to provide solution to the entrepreneur. It should also have authority to remove many of the unnecessary compliance burden. Ease of doing business commission, a commission where an entrepreneur can reach out 24/7, 365 days a year, is the need of the hour.
Okay, the ease of doing business commission. We'll try and get your audio fixed in a moment. But Neelkanth, you're hearing these various ideas. As I said, there are lots of ideas, and you cannot fault the Modi government for throwing up ideas. Smart Startup India, Stand Up India. There was an internship scheme announced last time around. A lot of these schemes are well-intentioned, no doubt. But the execution at times, it depends on which part of the country. State finances are a big issue. We focus a lot on the union budget. The economic survey also expressed their concern about the number of states that are experiencing high revenue deficits. Does the budget need to give some kind of a signaling as well to the states?
Let's see what the Finance Commission has to say. Remember that in all of this discussion, we are assuming status quo on the Finance Commission side, and this is around this budget. The 16th Finance Commission will also be submitting its recommendations. So it is quite possible, given that the fiscal largesse, the fiscal indiscipline that is very clearly visible in many of the states, is hurting longer-term growth potential. It is up to the Finance Commission to actually create weights and measures, incentives and disincentives, which influence the transfers to the states. So it is quite
because
possible.
You see, because there's a feeling, just to push that, Neelkanth, is that the government's one eye, and it's been said in past budgets, has been on which states are going to the polls. And therefore, those states get, in the budget also, schemes are announced for those states. You saw immediately after the 2024 elections, Bihar and Andhra Pradesh were the flavor of the season. Do we need, in a way, the budget to do that? Or do you believe the Finance Commission should be now looking at much more closely at the way states are spending money? The budget needs to give the big picture.
Exactly. So the budget does not have the discretion. So the center does not have the discretion to allot or allocate specific funds to states in the budget. So the Consolidated Fund of India cannot make subjective decisions. So some of the schemes that got a lot of publicity in the media for Bihar and Andhra Pradesh were about PSUs announcing specific projects. That's not part of the Consolidated Fund. The state-specific measures and the incentives and disincentives need to be a part of the Finance Commission recommendation. So if there are revenue deficit grants, if there are specific incentives that the Finance Commission can create, that if your if your capex to GDP is so much, then you get maybe a few tens of basis points higher funds, which can, in its entirety, can be substantial in terms of the absolute amounts. I think those changes can happen there. The center has created, in fact, this is something the economic survey also flags, that this 1.5 lakh crore interest-free loan for states for doing capex has actually helped support the capital expenditure at the state level. So if this was not the case, and this also comes with certain conditions, if you have to meet certain conditions to be eligible for this, if this was not the case, the state capex would have been a lot lower. Those are some very interesting charts in the economic survey as well. So there are measures. Maybe this 1.5 lakh crores can be made 2 lakh crores. Maybe there's some additional conditions that can be put in. But remember that if you try to go too tight, you are actually creating longer-term federal problems. So one of the reasons the 14th Finance Commission had advocated against too much of discretion being given to the center and allowing more fiscal freedoms to the states was exactly to let the federal polity work. In fact, what I would be a strong votary of is that the states themselves, of course, there's nothing to do with the union budget, but the states themselves focus a lot more on the state finance commissions and start thinking about tier 3 devolution, because some of the challenges on the urban side can only be tackled at scale. You can have the chief minister drive urban infrastructure and financing for one city or two cities. but the bandwidth will not be there. So the only way to handle it systematically for 500 and 1,000 towns and cities is to allow tier 3 devolution to happen. But that's not a topic for this union budget.
Sure. I just wanted to, for a moment, only focus on state finances because, as I said, we focus a lot on union budgets and don't look at state budgets across the country. But back to the big final question, what is your forecast for the Indian economy is a question I want to pose at the end to all of you in 2026. And importantly, the question that's been a running theme, how should the government respond to global headwinds? Sajid, you want to go with that? What is your forecast, therefore, for 2026? And an area we didn't speak about a bit, disinvestment. There's a lot of talk of deregulation and disinvestment being pushed through in this budget. What is your forecast for the Indian economy in 2026 in the first instance?
A couple of things, Rajiv. One is that India is clearly experiencing cyclical recovery. Pranjal touched upon this. 2025 saw lots of cyclical supports, your income tax cuts, GST cuts, rate cuts, regulatory easing, a strong monsoon, and that's going to drive growth for the next 2 or 3 quarters. But the budget needs to be thinking about the morning after. What happens when these cyclical impulses fade? And there, my suggestion for a long time has to be that if private investment has to pick up, you need to boost demand more structurally. You need to boost demand more structurally, both in terms of exports and in terms of consumption. We spoke about what needs to be done on exports. On consumption, really, it's about how do you boost labor incomes over the next decade. We're in this crazy time where there's this race between capital and labor. And the only way that labor will be able to compete with this inexorable capital productivity is, a mission-like mode on education, on skilling, on health. I know these are boring things. They've been said before, but I think this is absolutely crucial. Without that, labor will struggle to compete with capital. Without that, we won't get the labor incomes that are going to drive consumption. So I'll just say that in the next few quarters, growth is going to remain strong. This is a cyclical upspring, pickup, but we need to ensure that this recovery continues. I'll end with the analogy that Pranjal made on the T20 in the test match. I think on macroeconomic stability, it's okay to be in test match mode. Right, on fiscal, build buffers, monetary build buffers. But when it comes to reforms, we have to think we're in a T20 match. We can't be on the reform front taking a test match approach because, let me tell you, in 22 years, by 2046 or 2047, our demographic dividend peaks. So the next 20 years are going to be absolutely crucial. After that, our working age population goes to zero. And it's very hard, as China is finding out, to get 7-8% growth when your working age population goes to zero. So yes, on macroeconomic stability, go the test match mode. On reforms, we're in the midst of a frenetic T20 against a very hostile global backdrop.
Pranjal, you want to respond?
No, absolutely agree. And I would say that I think...
And your forecast as well.
Sure. I have a 4-point agenda on the economy. Number 1, restraint, have fiscal restraint, maintain your macroeconomic stability, very important in an uncertain world. Number 2, continue with all of these external reforms you've been doing, like bringing down protectionism, signing trade deals, but please also look east, not just west. Third, all the domestic reforms that you're doing on deregulation is great. I call it hard reforms, but also think of the soft reforms like tax certainty, which Neelkanth Kidwai was speaking about. And fourth, maintain a flexible exchange rate because it can be the number 1 shock absorber at a time when there's so much of global volatility. I think if we follow these 4, we're in a good way. In terms of GDP growth forecasts, because there's so much of uncertainty, I would sort of put it in the 6.5 to 7% range. Yesterday's economic survey, pointed at about a 7%. I would be a little lower than that. I just want to go in a little conservatively in a very uncertain year.
Okay. Neelkanth Kidwai, your forecast for... Soumya, why don't you go first and then I'll come to Nena. Soumya Kanti Ghosh, your forecast for 2026.
Yeah, I think on a growth perspective, we are actually for a growth rate of around 7% for the FY27. But as I pointed out earlier, I think we need to do the things which we are doing. We need not go for any extravagant things, because I think a lot of these extravagance and what is going to happen in the next couple of months we're going to see from the countries like US in terms of geo-fragmentation, and that is only likely to increase. So in an increasingly fragmented world where nothing is uncertain, I think what we can make certain is our policy trajectory. And apart from the various policies which other panelists have mentioned, I will again harp on a couple of things. First is that on the ease of living, I think on that ease of living, the government has actually initiated a lot of macro reforms. Maybe is the now time for micro reforms from an urban infrastructure perspective. The second point which I'd like to know is, say is that maybe now is the time to go for some of the reforms which are a little bit sensitive reforms. As I said to you, agriculture is one of the sectors where price discovery has almost been absent in the last the couple of decades. We have tried to do it, but it is always a sensitive issue. And maybe is now the time to come to do some sort of a price sensitivity, because a large part of the Indian population still lives in the rural areas. And finally, I think on the fiscal front, and as Neelkanth was mentioning in terms of the Finance Commission recommendation, of course, the FC recommendation will be out in the next couple of days. But the only thing which we can say at this point of time is it's important that we maintain on this part of fiscal consolidation, debt consolidation, and also on the part of the states also. Because after all, India is a union of 28 states and the center apart from the union territories.
Nainalal Kidwai, is business bullish about 2026, or is business very worried about the uncertainty? Again, taking off from Davos, on camera, people say all is good. Most industrialists will give 11 on 10 to the budget, whatever Nirmala Sitharaman says. But there are those who privately speak otherwise. And there is a bit of a fear factor there, that there is concern because of the uncertainty and anxiety.
I can only say, harking back to the same FICCI survey, that the mood was pretty optimistic, that there is a belief that India will achieve the 7%. And I think it comes from some of the demand-related reforms that had set in over the last year. And the hope, therefore, that as demand builds, there will be reason to go in for more capital expenditure. I would also like to believe that there is room, even while we look at fiscal constraint, to up infrastructure spend. And I know that these are contradictory, but I believe this is possible because finally InvITs and REITs have taken off. And the ability for government to securitize its assets by chucking those assets which are indeed yield returning or interest bearing, throw them into these InvITs, and in the process, therefore, free up that money to go back into infrastructure. So while looking at fiscal constraint, to just make the infrastructure that's already there work for us to be able to create more of that infrastructure, because infrastructure spend has been a huge success from this government. It brings logistics reductions, it helps industry, and as we've well seen, it kickstarts the economy. So I would hope that we will continue to see some reforms in the bond markets, which are again critical by bringing in long-term finance, and by maybe even tweaking again the capital gains tax on the way bonds and bond savings are indeed being treated. We bring the mojo back into our bond markets.
Nilesh, are you bullish about the economy in 2026, or should we be very cautious?
I'm bullish on the economy. Of course, there are worries in terms of monsoon. This year we might get impacted by El Nino. But my expectation from the budget will be, it will be a budget where there will be a part to ensure that there is revenue surplus on a sustainable basis. And CapEx is higher than the net borrowing program. Last year, the budgeted CapEx was 11.2 lakh crore, and the net borrowing program was 11.5 lakh crore. I hope this year, net borrowing program is less than the CapEx.
Okay, I just have a minute or two on the show. I thought we'll do if you were Nirmala Sitharaman, would you be sleeping well at the moment for the next 24, 48 hours? Neelkanth Mishra, would you want to be the finance minister in the times in which we live?
It is definitely a very challenging task to maintain on the course, sustain on the course of fiscal consolidation, even at a time of severe global volatility. There are so many claimants for the limited fiscal resource that are available to actually use this opportunity of macroeconomic stability that exists within India to drive structural reforms, take long-term risks. So definitely a taxing job, but we have seen some remarkable success over the last 6-7 years, and I think we should be optimistic about the future as well.
Sajid Chinoy, would you sleep well if you were the country's finance minister over the next 24-48 hours ahead of a budget with global headwinds? Who knows what Donald Trump does tomorrow morning?
I think at this point in time, no policymaker around the world can sleep well, given the global volatility. But, I want to underscore the fact that India still, we shouldn't forget, is still a relative beacon of macro stability. Our fiscal, over the last few years, what we've seen with the government is to under-promise and over-deliver on the fiscal. So we have been gradually building buffers in the last few years, whether it's fiscal, whether it was monetary, whether it's the exchange rate. So I think we should take comfort from the fact that macroeconomic stability is assured, and I'm sure the budget on Sunday will reinforce that. The question is, as we remain conservative of macro stability, how do we also simultaneously become more adventurous and continue the reform impetus that, that has started the last 4 or 5 months? I think that balancing act will be the key challenge.
Okay, so final word to you, Pranjal, since you gave the T20 test match analogy. You said Finance Minister should look at this as test match and not T20. There's also 50 overs. So you need both, don't you? You need to have a few things that you accelerate and a few things you're cautious of. Would that be a more balanced approach to take?
Yes, basically, continue to persevere was my point. And, if I was finance minister, I would sleep well because the country is doing a lot more reforms right now than we were doing same time last year. We've been able to do things like signing trade deals with countries in which we were dragging our feet for 10 to 20 years. So I think we've come a long way, and there's a big task cut out for the future as well. So I need to sleep well. So I'm sort of 100% energy for that too. So I think, it's a very difficult time, but we're doing the right things. I think we're doing reforms. We have to accelerate some. We have to persevere on some. I would say, again, this is a test match.
Okay, let's leave it at that point. I think it isn't easy in these times of global headwinds and the uncertainty it causes, but I'm glad that we had such a fine panel of voices who've given us a chart of what lies ahead. And I want to thank each and every one of you for taking the time, for joining us on the budget roundtable ahead of Union Budget 2026. Thank you to each and every one of you, and to you, the viewers, thanks for watching. Stay well, stay safe. Jai Hind, Namaskar.